Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into LendingClub's fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. LendingClub, a leading digital marketplace bank, has just released its latest earnings report, showcasing significant growth in several key areas. I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. LendingClub reported a total net revenue of $270.2 million for the fourth quarter, a 17% increase compared to the previous year. John, what are the key drivers behind this revenue growth?
The revenue growth was primarily driven by improved marketplace loan sales pricing and higher net interest income due to a larger balance sheet. Despite a slight decline in net income to $9.7 million, the company managed to maintain a strong revenue trajectory.
And how did this impact their earnings per share?
The adjusted earnings per share for the quarter came in at 88 cents, which is slightly below the forecasted 10 cents. This was influenced by a one-time, post-tax $3.2 million non-cash impairment expense related to the Tally acquisition.
Balance sheet and asset growth. Moving on to the balance sheet, LendingClub's total assets increased by 20% to $10.6 billion. What contributed to this growth, John?
The growth in total assets was largely driven by the success of their structured certificates program and the acquisition of a $1.3 billion loan portfolio. Additionally, deposits grew by 24% to $9.1 million thanks to their competitive savings and CD offerings.
How did their loan originations perform?
Loan originations saw a 13% increase, reaching $1.85 billion. This was fueled by new consumer loan initiatives and strong demand from marketplace investors.
Operational efficiencies and future outlook. Let's discuss operational efficiencies. LendingClub reported improved net charge-offs and a solid return on equity. Can you elaborate on these metrics?
Absolutely. Net charge-offs improved significantly to $46 million, down from $82.5 million the previous year, reflecting better credit performance. The return on equity was 2.9%, slightly down from last year, but the pre-provision net revenue increased by 34% to $74.3 million, indicating strong operational efficiency.
And what does the future hold for LendingClub?
Looking ahead, LendingClub is forecasting loan originations to exceed $2.3 billion by the fourth quarter of 2025, with a return on tangible common equity expected to surpass 8%. This suggests a positive outlook for continued growth and profitability.
CEO's vision and strategic initiatives. Scott Sanborn, LendingClub CEO, mentioned the company's strategic focus on innovation and growth. What are the key highlights from his statement?
Scott Sanborn emphasized the successful execution of new products and experiences, which have contributed to LendingClub's growth. With over 5 million members, the company is well positioned to accelerate its growth in 2025, focusing on increasing originations, revenue, and return on equity.
How does this align with their strategic initiatives?
The strategic initiatives are centered around leveraging their digital marketplace platform to offer innovative financial products, enhancing member experiences, and driving sustainable growth. This aligns with their goal to expand their market presence and deliver value to both borrowers and investors.
Key takeaways. In summary, LendingClub has demonstrated strong revenue growth and operational efficiency, despite a slight miss on the EPS forecast. With a positive outlook for 2025, the company is poised for continued success. John, any final thoughts?
LendingClub's strategic focus on innovation and growth, coupled with their robust balance sheet, positions them well for future expansion. Investors should keep an eye on their progress in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Lending Club's performance in the comments below.